Hello, welcome to our look ahead to the year 2023. It is likely that several factors will shape the future of Sri Lanka, with many seeing this as the year the crisis bottoms out. While it is impossible to predict exactly what the future will hold, it is likely that the country will continue to face challenges and opportunities. Let's see how the key economic indicators are likely to perform in 2023. We assess that Sri Lanka's gross domestic product will contract by at least 2.5%, mainly impacted by higher corporate and personal taxes, import restrictions in the early part of the year, and a challenging global economic environment. Policy interest rates is likely ease to 12% as inflation declines and market rates adjust lower. The rupee may fluctuate in the range between 340–390 rupees against the US dollar. This is as the IMF and other fund inflows appreciate the currency, whilst relaxing import restrictions and global economic environment may cause the rupee to give up some value. We assess that the balance of payments deficit is likely to reduce due to higher worker remittances, tourist earnings and FDIs, which would offset an expanding trade deficit. Debt to GDP may reduce on higher tax revenue and expense controls, resulting in curtailing the need for significant additional borrowing. Now let's look at key developments impacting these indicators. An IMF deal to be signed. As a result, funding from the Asian Development Bank, World Bank and other bilateral partners to follow. Interest rates to ease. Rebounding tourism and improving worker remittances. Global recession to impact trade, commodity prices and currencies. Let's look at these developments in more detail. Firstly, the $2.9 billion extended funded facility from the IMF is very likely to be signed by end March. We feel this would be made possible on the receipt of debt assurances from China and India, as well as limited domestic debt restructuring. As such, the first tranche of the IMF facility, amounting to roughly $600 million, would likely be received in the early second quarter. An IMF deal will lead to multilateral and bilateral partners extending support to Sri Lanka. In December of 2022, a former central bank governor stated that Sri Lanka is discussing with the World Bank and Asian Development Bank to get loans of up to $1.9 billion after a reform program with IMF is approved, adding that Japan has also promised funding. Impact. Funding from the IMF and other bilateral and multilateral partners will help boost economic activity in the country. But higher taxes, import restrictions and global recession will dampen growth. Interest rates are likely to be reduced over the course of the year. This is helped by declining inflation, which would be impacted by tight fiscal policy, with new tax hikes constraining consumption. Further increase in food production, as well as easing of import restrictions, are likely to bring down prices. According to the current governor of the central bank, inflation is expected to come down to mid-single digits by the end of 2023. Moreover, clarity with regards to domestic debt restructuring will also help market rates reduce. Currently, uncertainty in the domestic debt restructuring process has created a significant premium between market rates and policy rates. Rebounding tourism and steadily improving foreign worker remittances would boost reserves. In 2022, Sri Lanka welcomed over 700,000 tourists, generating just over $1 billion in earnings. According to Haran Fernando, Minister of Tourism, an arrival target of 1.5 million tourists has been set for 2023. Foreign worker remittances in 2022 are still low compared to previous years. In 2023, remittances are likely to improve due to the flotation of the rupee, and also from new inflows by the significant number who left Sri Lankan shores for overseas employment. Analysts around the world are predicting a global recession in 2023. Sri Lanka's largest export market, the United States, is to experience growth of only 0.5%, which will significantly impact the country's textile and apparel exports. This is compounded by Sri Lanka's second largest export destination, the United Kingdom, which is estimated to contract 1.0%. However, India, Sri Lanka's third largest export market, is slated to grow 7.2%. Impact. A slowdown in Sri Lanka's main export markets will mean less demand for goods and services, particularly in the first half of the year. Such, along with the country's import dependence, meant the trade deficit would widen. However, increased foreign worker remittances and earnings from tourism, as well as the Board of Investment's $2 billion FDI target for 2023, should reduce the deficit in the balance of payments. Due to the combination of the above-mentioned events, we analyze that the Sri Lankan rupee will significantly fluctuate against the US dollar during the year. The anticipated inflow of funds from the IMF, as well from other bilateral partners and multilateral agencies, will strengthen the currency in the first half of the year, to a range we estimate of around 340 rupees. In the second half of the year, we feel the rupee will depreciate with the full relaxation of imports, particularly motor vehicles and capital goods, as well as by the allowing other outward remittances. This will put pressure on the currency, thus ending the year around 390 rupees against the greenback we estimate. Government debt to GDP is likely to reduce in 2023. Increased tax revenue and non-tax revenue, along with steady government expenditure, may lessen borrowings requirements. And finally, two other developments, for which we are unable to determine the impact are local government elections in March and any progress related to the Port City project. In conclusion, 2023 will be yet another year of change for Sri Lanka, impacted by internal developments as well as from global events. We will continue to keep you informed of all developments. Subscribe to our YouTube channel or send us your mobile number to directly receive our programs via WhatsApp for free. Thank you for watching. If you have any questions or comments, please leave them in the comments section below.